Hey everybody, welcome to Mortgage Today for Monday, July 15th, 2024, and oh, what a day it was. UMBS started the week off down 9 basis points. S&P futures were up 24 points this morning. The U.S. stock futures rose and longer maturity bonds retreated as investors ratcheted up wagers that Donald Trump would win the presidential election after an assassination attempt. Markets are positioning for a Trump return to the presidency that brings more tariffs and increased spending. Markets are positioning for a Trump return to the presidency that brings more tariffs and increased spending, moves that could spur inflation, according to Cole, who is an analyst. According to the analyst Cole, that could make the job of the Federal Reserve a little more difficult, even as signs mount the pace of price growth is coming under control. Essentially, a Trump trade is a bet on growth, and the key variable to watch will be the shape of the yield curve. We should see the yield curve continue to reduce its inversion if the market sees stronger growth going forward. On the other hand, assassination attempts generally don't signal stability, which will be negative for the U.S. dollar at the margin. Traders will get a chance to gauge the appetite for interest rate cuts today.
Battery is under 10% full.
Don't worry about a lot of the headlines today. They're much more dire than the underlying message. Long story short, there are always some counter trend influences, even when the bond market is trending decisively in one direction. One might refer to the trend since May, or at least last week's CPI reaction, as decisive. As such, one might increasingly expect some ground to be given. We could certainly argue that we've seen resistance in bonds ever since the middle of Thursday morning following the CPI rally. In a figurative sense, this resets the board for the next move, and big ticket economic data helps determine the direction of that move. Last week's CPI helped solidify the on-again, off-again downtrend in rates that began in May. The burden of proof is increasingly on bond bearers and upbeat economic data. That is welcome news for risk-tolerant clients, but it's good to remember that there's always pockets of correction in any trend. The more we push long-term lows, the more such risk makes sense to consider. Beyond that, data dependency reigns supreme in the shortest term. Tuesday's retail sales is likely the biggest risk of the week on the data front. UMBS ended the day down 17 basis points at 100.97. The 10-year is trading down at 4.233. But at 100.97, that brings us back underneath that Fibonacci line that we broke ever so slightly last week, and puts us in a wide range with a Fibonacci floor at 100.627, with the 25-day moving average moving up to be support on that. We also got some industry news that HUD has accused Rocket and appraisal companies of discrimination. This one is pretty wild when you look into it. I'll be curious to see what happens. Is apparently appraiser Maxim, I'm not going to try the last name, of Maverick Appraisal Group, did an appraisal on a property in Denver for a black borrower and took all of the comps from a majority black neighborhood and discarded comparable comps in the larger white population surrounding the property, which is going to be tough to defend.